Hello traders, welcome back to my channel. So this is a live trading um, on Wednesday for the federal US federal bank. And as you saw, I had like a long trade, so I knew that the decision was gonna be positive because I was watching the US dollar all day long. So it was like going down, down, down. And that was like a trick from traders and the big guys to go lower so that they can buy from a lower position, a lower level, and then and then buy low and get as much profit as they can. So as you can see, we have this very long candle. So I placed an order right here, buy order, and actually entered with 20 volume, 20 pips, and I had like $3,611. And this is what I do normally in my trade. So on the decision day, the federal U.S. Federal Bank, uh, Reserve Bank. So I'm gonna place another order because I think the dollar should reach this level again. Guys, you have to be careful because you have to know how to trade the FMOC news. There is uh, two different uh, parts during that day. Yeah, as you can see, guys. Yeah, the dollar, I'm sure, pretty sure, is gonna reach this level. Yeah, this is gonna be our target. And I don't need to have stop loss. I just put trailer stop, but I can put my stop loss right here because it's very volatile. So I don't wanna like keep being stopped out. So now the trailer stop was triggered. You see again. So this time I'm not gonna put any stop loss because it's gonna reach this level and then it's gonna stay there for a while until the federal press conference. Maybe we're gonna have a reverse or something or continuation of that uh, trend. So as I said, there is like 30 minutes. The first 30 minutes is for the decision of the federal bank, and the other 30 minutes is for the press conference. So what I do most of the times, I only trade the press, the decision, the Fed decision, because I make my structure and uh, set up everything, and I get as much probability as I can to see which direction the market is gonna probably move to. And then I place an order at the time of like 1 minute before the news release. But during the press conference, sometimes you don't know, especially during the first 5 minutes, you never know what is going on there because maybe what's Jerome Powell is saying might have a positive clue for traders, investors, or a negative clue. So yeah, as you can see, so don't panic. So stay cool. Know what you're doing. Normally, this candle should like end up right here, continue uh, its move higher because it already moved higher. Sometimes it starts playing around like this, and then the next uh, candle. By the way, I'm trading the 15-minute chart, so you have to trade two candles, which is like 15 minutes each. So that way you have to know. So as you can see, the standard deviation is giving us uh, showing us momentum that is being involved and in the market. So this is the highest level, and for sure the standard deviation should reach this level as well or higher a little bit to uh, to give us more confirmation to stay in our trade. So I decided to go live with you guys to show you how important to trade the news, but you have to know the technique to trade those moments which are very volatile, and you have to know exactly how to play with the market to get your profits and get out of the market. So right now I can close my trade when uh, my I see profits right here, but I don't want to do that because I'm pretty sure there is a target right here. It should, because this is the level, the highest level, the USD.JPY reached uh, today and before now. So I'm pretty sure the price should reach this level again before either starting crossing this level, or going down again during the press conference. So I evolved this technique and method throughout the years of trading. So I understood how the big guys play with the market. As you can see here, the deviation is getting up, moving higher, as I said before. Also, watch the volume here. It's higher. It was quieter before, but now it's getting higher. So I can close my trade right now, boom, but I don't want to do that. I just want to show you exactly how I do. I can place my stop loss here or even here and drag it further higher. The more it moves higher, the more I move my stop loss right here. But I'm not doing this for the sake of the live trading, to show you that when it's moving higher, it's moving higher. When it's going down, it's going down. There is no joke with that. Even though sometimes you see that that market is like being trying to scare traders or trying to stop them out in order to stay, only the big guys stay in the market to accumulate all the profits, all the gains. But you have to be smarter than them. You have to open your bag, fill it with money, and then run away and leave the market. Don't stay after 30 minutes of trading. That's the best. That's the best way to trade the news, especially the FOMC. Yeah, as you can see, the US dollar boom higher. You can see here Yeah, higher, but not yet actually. But anyhow, so we have like kind of positive for the US dollar, but we don't care. We just, as you can see, almost now 600, 900. Yeah, 1000 I can close right now if I wanna be like scalper, an aggressive scalper. I can do that, but I don't want to do that. I'm just waiting for my target to be filled, which is gonna be filled very soon. So don't worry, don't don't panic, don't um, hurry. So just wait and watch. Yeah, that's beautiful when you see the green color right here, reaching the target here. Wow, this is a very long candle that covered like it's like uh, uh, it covered all the gains the bears gained this morning all day long. We still have 1 minute left. Yep, I already got four uh, 3,611 and $135, but I would like to have like some more, so almost $2,000 more. So that being said, our profits in just 15 or like 20 or not even 30 minutes around $6,000, which is pretty neat, pretty cool. I was waiting all day long. I was just watching because whenever you see the dollar during a big economic event, the dollar is dropping before that event, be sure that it's gonna move higher, and vice versa. Sometimes they start going higher and higher and higher all day long, and then just before the news release, you're gonna see a huge drop in the US dollar. So here, yeah, trying to be tricky a little bit, but pretty sure this is the level it should reach before doing any kind of move afterwards. So I'm pretty positive about my decision. So let's wait and see. That's gonna be pretty and beautiful. So let's just wait and see. Yeah, it's pushing. The bulls are taking over uh, aggressively. They're trying to push the market higher. Let's see the decision. Yeah, actually, not much. They didn't decide to raise the interest rate, but Yeah. So, but anyhow, it is still positive for the US dollar. So you see the standard deviation, what it did, it moved higher, and maybe during the press conference there might be a clue, a positive clue for increasing the interest rate in the coming months, which is gonna push the market maybe higher, a little bit more higher, or much higher. But I don't care about all that. All what I care about is that my target gets filled sooner or later. Yeah, because the way this candle moved higher, this far, it's not easy for the bears to bring it back down here or even to here because that shows strength, and it crossed the 57 moving average so aggressively, so sharply that it broke it out, and trying to reach this level that was the highest price early in the morning, uh, UTC. Yeah, if you want to close your trade, you can close it right now, but I don't want to. As I mentioned before, I'm waiting for, because it's not too far. Maybe if it was here, something here, maybe it's too far, but it's pretty close. Not that much. So no worries. Just want to see that green color and the target is filled, which is a beautiful feeling and sentiment for every professional trader. As you can see, the market is very volatile. Yeah, it's not easy to trade during the news, but if you're uh, accustomed to it, if you're used to it to trade during these very volatile moments, times, yeah, pretty sure you can make pretty pretty much a lot of money and get richer and make a lot of cash off of that. But as I said, have to be careful. Just want to celebrate with you guys, my followers, people who trust me and watch my videos. Um, make sure that they get value off of watching my videos and following my channel. This is what I want. This channel is for education, training, and sharing value information about trading. Yeah, the bears are struggling, pushing back, but the bulls are still there. Yep, just have to wait and watch what's gonna happen. Yeah, this is trading. Have to have that patience and that waiting capacity that you can wait for your targets and for your strategy to be accomplished. If you are trading, if you have a buy, just stay buy. If you have a sell, stay in the sell position. Don't go like buy and sell, or sell and buy. You never, you don't know what you're doing. This is how you eventually gonna lose your money and be miserable in your trading. We have 5 minutes more before the press conference starts. Yeah, the price eventually is gonna like come back to this level no matter what happens, because this is the level the big guys agreed upon. You see, so This is the lowest level. This is the highest one. So we already reached the lowest price, and now we're heading toward highest. Sorry. I would have closed my trade before a long time ago, but for the sake of the live trading, I just wanted to show you exactly the tricks the market does during events like these. So uh, now we should wait for the press conference. But during the press conference, the first like 3 minutes, you won't see anything seriously happening. But like after 4 or 5 minutes, after the press conference starts, you're gonna see a major move, which is the second major move in these 1 hour trading. The first 30 minutes and then the second 30 minutes. Remember, guys, we have two 30 minutes. First 30 minute is for the Fed decision, and the second one is for the press conference, uh, where Mr. Jerome Powell answers questions about the U.S. Reserve Bank, the planning and stuff. So as you can see, the bulls are still pushing higher, which is a confirmation that the price is struggling to go higher to that level where it reached this morning universal time, almost half, like, yep. So the first 30 minutes are done now, so we're waiting for the press conference. So I'm pretty sure the bulls are will push higher. Yeah, let's see what's gonna happen. I'm not looking for that much. I'm just placing my target right here. So once it reaches it, I'm gonna get out of the market. But if it goes, it reverses, I'm gonna close the trade. Yeah, I think the press conference has started now. Connection is being slow, I'm sorry. I apologize for that. Fed holds rates steady, but leans hawkish with fewer rate cuts expected next year. So that's why that hawkish feeling pushed the US dollar to go higher. That's why. So now we are waiting for press conference. Which already started. Yeah, you can see now. See?
Higher interest rates also appear to be weighing on business fixed investment. In our Summary of Economic Projections, or SEP, committee participants revised up their assessments of real GDP growth, with the median for this year now at 2.1%. Participants expect growth to cool, with the median projection falling to 1.5% next year. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 150,000 jobs per month, a strong pace that is nevertheless well below that seen earlier in the year. The unemployment rate ticked up in August but remains low at 3.8%. The labor force participation rate has moved up since late last year, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. FOMC participants expect the rebalancing in the labor market to continue, easing upward pressures on inflation. The median unemployment rate projection in the SEP rises from 3.8% at the end of this year to 4.1% over the next 2 years. Inflation remains well above our longer run goal of 2%, 4% over the 12 months ending in August, and that excluding the volatile food and energy categories, core PCE prices rose 3.9%. Inflation has moderated somewhat since the middle of last year, and longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Nevertheless, the process of getting inflation sustainably down to 2% has a long way to go. The median projection in the SEP for total PCE inflation is 3.3% this year, falls to 2.5% next year, and reaches 2% in 2026. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5.25 percentage points. We see the current stance of monetary policy as restrictive, putting downward pressure on economic activity, hiring, and inflation. In addition, the economy is facing headwinds from tighter credit conditions for households and businesses. Range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings. We are committed to achieving and sustaining a stance of monetary policy that is sufficiently restrictive to bring inflation down to our 2% goal over time. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.6% at the end of this year, 5.1% at the end of 2024, and 3.9% at the end of 2025. Compared with our June summary of economic projections, the median projection is unrevised for the end of this year, but has moved up by a half percentage point at the end of the next 2 years. These projections, of course, are not a committee's decision or plan. If the economy does not evolve as projected, the path of policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. Given how far we have come, we are in a position to proceed carefully as we assess the incoming data and the evolving outlook and risks. Real interest rates now are well above mainstream estimates of the neutral policy rate, but we are mindful of the inherent uncertainties in precisely gauging the stance of policy. We're prepared to raise rates further if appropriate, and we intend to hold policy at a restrictive level until we're confident that inflation is moving down sustainably toward our objective. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. It is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Thank you. Colby Smith with the Financial Times. What makes the committee inclined to think that the Fed funds rate at this level is not yet sufficiently restrictive, especially when officials are forecasting a slightly more benign inflation outlook for this year? There's noted uncertainty about policy lags. Headwinds have emerged from the looming government shutdown, the end of federal child care funding, resumption of student debt payments, things of that nature.
So I guess I would characterize the situation a little bit differently. So we decided to maintain the target range for the federal funds rate where it is at 5.25% to 5.5%, while continuing to reduce our securities holdings. And we say we're committed to achieving and sustaining a stance of monetary policy that's sufficiently restrictive to bring down inflation to 2% over time. We said that. But the fact that we decided to maintain the policy rate at this meeting doesn't mean that we've decided that we have or have not at this time reached that stance of monetary policy that we're seeking. If you looked at the SEP, as you obviously will have done, you will see that a majority of participants believe that it is more likely than not that it will be appropriate for us to raise rates one more time in the 2 remaining meetings this year.
Yeah, as I said, my dear subscribers, traders, so the price actually is fluctuating, and as I said, no matter what happens by the end of the day, it will reach this level. So for the sake of the length of the video, I'm not gonna stay here for a long time. Anyways, as I told you before, I would have closed my trade right here with like profits of like $1,000 or $900. But anyways, so for the sake of the live trading, I just wanted to show you how the FOMC news is traded. You can make a lot of money off of that if you know how to trade it. And as I said before, already like um, like 10 minutes since the press conference started, and as you saw, it is like given a hawkish for investors, a hawkish sentiment for to investors. So that's why when it's a hawkish, it's positive for the US dollar. It pushes the US dollar higher. When it's dovish, it's negative for the US dollar. That's why the US dollar drops. And here, yeah, as I said, so I'm gonna leave this trade and come back to you later with uh, 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 a wrap up and see what's gonna happen later. Okay, thanks for watching, guys, and good luck to you, and see you next time. Take care.